Well, folks, welcome to Tuesday morning. I'm going to do a quick update for you and from my trading room. It's all a bit hectic right now because the markets are crazy and it's really difficult to trade at the moment. But the important message I want to get across from this video and these charts is to keep your risk low. We don't want to go YOLO, all in, load the boat, all that sort of thing. But if you diversify and manage your risk properly, you should be okay. So let's go and have a look at the charts. Well, good day, folks. Quick update. I'm going to talk about natural gas quickly, and then I'm just going to point out a couple of other things in the market which you might find interesting if you're trading other commodities or perhaps currencies or gold or anything like that, or the stock markets for that matter. So as you all know from the short I put up yesterday, and if you're not following me on Twitter, go across to my Twitter channel. The link's underneath here in the description somewhere, and you can follow my updates on Twitter regarding natural gas and all the other things I'm trading. So natural gas just held up quite nicely yesterday, bouncing off this trend line, closing with a kind of a doji candle, hesitation candle. Remember I said this is not a reversal candle, it's just a hesitation. But we held up quite nicely, and we had a little gap up yesterday after the market closed, and we started today a little bit higher than yesterday. So it all looks quite good, and I decided to just try with a very small long position on natural gas, looking for a move up through into these resistance levels and eventually up to our target at 3.5, 3.6 or 3.75. I've set my target at 3.57. Don't ask me why, but it just looks like a good number. It's kind of in the middle of this range here. I don't know if we're going to get to the top at 375 or if we're going to stop at 340. So I've just gone kind of in the middle there. But that's all right. So let's see how this goes. Now, as you'll know, if you've read the tweet, and if you haven't, once again, go and follow me on Twitter. I'm willing to add to this trade at 1.8, $1.80 and $1.50 just below us. I think we should hold above $1.50. The reason I've entered now and not down a bit lower is because there is a chance, in fact, that we may hold above this $2 level. And this is starting to look slightly constructive. I'm not convinced about it. Please don't get me wrong. And as I said on my tweet, this is not a signal to go gangbusters long on natural gas. I'm just having a little nibble at it. So don't load the boat or go YOLO or go all in. Whatever it is they say in places like Wall Street Bets and various crypto channels. That's not what I'm saying. I'm having a little nibble at it. I'm willing to add to 1.8, $1.80 and $1.50 below us. And I'm going to put my stop loss. And when I say stop loss, it could be a hedge below $1.50 somewhere. I think $1.40 or $1.47, something like that. So that might be a hard stop loss or a hedge. On my Oanda account, which I demonstrated in one of the previous videos, I'm just putting a hard stop loss in because I don't have a hedging facility on there. But when it comes to my main trading accounts, I may or may not hedge. I don't know. But with a bit of luck, actually, we'll hold above here and we might move up into some of these resistance levels. Note where the moving averages are. Here's the 20 period. There's the 50-day moving average. And way above us, we've got the 100-day moving average moving down into this target zone, and then the 200s miles above us. So will we get a bounce here or not? I really don't know. And this is a calculated risk. I'm willing to risk 1% on this trade. And if I play it correctly and add to the lower levels if we get there, and also add as we break up through resistance levels, this could be a 1% risk and a 3, 4, 5% winner if it goes our way, depending on how this all works out. If we actually drop below $1.50 or 40, then this trade's over and I'll be out for roughly a 1 and maybe 1.5% loss if I add some more positions below us at 180 and 150. So that's natural gas, and we'll just have to see how that plays out. We'll monitor that. A couple of other interesting things. I'm slightly short on Bitcoin. I don't know whether we're going to fall down through this support level here. It's an interesting level that we're at right now. This pink area is a really good, strong resistance level. But the more we move sideways above this previous, let me just expand that for you, above this previous channel top, the more we don't manage to move down, the more likely it is that actually Bitcoin's going to burst up and go back to 30,000 and maybe even 31, 32, 33. So we'll keep a close eye on that. I don't know whether we're going to manage to fall down. Every time we get down to that channel top, we get a rejection back up again. So that's that. Gold, well, gold's looking pretty good. I'm looking to take a position on gold. We need to go and test that $2,000 level just above us again, then potentially up to 2,050 or 60, which is the long-term resistance formed by these previous spikes up into that area in 2020 and then last year in 22. So I think we'll probably have to go and retest 2,063. Whether we're going to get a pull back down to some of the support beneath us, perhaps at 1920, maybe even at 1880, I don't know, somewhere in these areas down here where these moving averages are moving up. I'm not too sure, but it's possibly worth trying a little long position. We're getting an ascending triangle pattern right here. You might call that a bullish pennant or an ascending triangle on the daily chart. So gold is looking pretty strong. Might be worth trying a small position here. But if you're in doubt about it, wait for a dip down to perhaps 1920, 1900, 1880, somewhere around there. I'm not sure if we'll get that dip or not, though. The other interesting move was on oil, US oil, and we've moved into this resistance level above us. I don't know. We had the gap up, of course, because of the cut down in production and supply by the Saudis and OPEC. Whether we'll get up to this 100 period moving average over here, I don't know. It's quite possible, and that's at around $84, $85. But we may need to fill this gap first and drop back down into 75, 76, 77. But if you're looking to short oil, perhaps it's best to wait for the $84, $85 region where this horizontal resistance line is going back into 2021 and also the 100-day moving average. It's possible even that we'll get up to this 50-day moving average at about 88. But overall, I think oil prices should move down, and really the range for oil probably is going to be somewhere between 85, maybe 90, but probably 85 down to 65, that sort of range. And I expect that's where we'll see it trading in the medium-term future. And of course, there's going to be pressure on the US to keep gasoline prices down. And we've got an election coming up next year, and we've got inflation in the spotlight. So we don't want to see any dramatic rises in the price of crude oil, that's for sure. When it comes to the stock markets, well, I'm as speechless as the next person. Whether we're going to get a pullback and a correction on Nasdaq, which has risen 23% in this first quarter. S&P not so much, only about 7 or 8%. But we're approaching resistance on the S&P. Nasdaq, I don't know, it's probably due for a pullback. It's a short week this week, so it's probably a good opportunity for it to pull back. The other one I'm short on is Nvidia. I'm not going to go into the details, but I think we've got a really good case to sell Nvidia into any rallies. I'm short at the moment, just nibbling at it at the moment, but we've got a very important resistance level above us. We've moved up in this first quarter from $139 up to $275, so a ridiculously sharp rise in this chip stock. And if we do get a recession and a big slowdown, which is probably likely, I think chip stocks are some of the names that are going to have to pull back a little bit, and we could get down into $240, maybe $220, maybe even $200 on Nvidia. The same goes for AMD. AMD tends to move a lot more intraday. We've seen a lot of faffing around at this top, forming this sort of top pattern over here on AMD, with this abandoned reversal candle over here right at the top, forming that spike high, with a gap up, gap down reversal type of pattern, and lots of wick highs over here. So I think anything below probably $99, $100 on AMD, allowing for a spike up into that green zone above us, which you just can't see, at around about 104, 105, all the way up to 110. So we're in the selling zone. We may have to get a little higher. I don't know. Depends what happens with Nasdaq and S&P and the way these markets are going. Anything's possible. Very difficult to trade stock markets at the moment, particularly with this big rally, which is now no longer a bear market rally. It's actually turned into a bull market because we've gained over 20% on Nasdaq in this first quarter. And then currencies, generally I'm looking to sell dollar-yen pairs. I think we're looking for weakness in all of these across the board. So we're short euro-yen and looking at shorting dollar-yen and potentially Australian dollar-yen. I'm not going to talk about that too much now. When it comes to the majors, who knows? Dollar index perching on the support still, but looking really weak. Big bearish engulfing candle yesterday, massive one. After a gap up, massive bearish engulfing candle. One can only think that the direction for the dollar at the moment, the way it looks right now, is down, which means the direction for the euro and the pound and the Australian dollar, etc., are all going to be up. But who knows? I really don't know at the moment. We're seeing on the 4-hour charts massive swings up and down on both pound on the euro. Pound's broken through the top. Euro struggling at 1.092, but I think we're going to have to reach up to 1.1 and potentially higher. I don't know how these are going to play out. It's going to be a short week. Liquidity is going to be a bit low, and it's anyone's guess on those. But overall, I think yesterday's candle on dollar index is indicative of further dollar weakness coming up. So that's it, folks. That's the way I'm trading this market. It's a tough one, and I've been trading for about 20 years, and this is one of the trickiest market periods that I've traded in. And it's across the board, from stocks to currencies to metals to commodities, all very, very tricky and difficult to trade at the moment. But the important thing is, we're not going to go YOLO, we're not going to go all in, we're not going to load the boat on any of these, and we're going to try and stick to risk management and diversification across a wide variety of instruments, commodities, metals, stocks, and currencies. Take care. Have a great day.